What's up, folks? We're going to do a Heine's Sunday afternoon weekly update. I'm going to be gone for a few days off my screen, so I figured I'd give you levels before I left. Downtrend, downtrend, downtrend. We are in it. I know everyone's trying to pick a bottom. If we are going to bottom, it will be here. As I've talked on this video of weeks for about this level, 35 to 55. Well, lo and behold, we're there. We closed at 41.36. So if we're going to bounce, it's going to be here. If we bounce, preferably we get above 41.90, but I'd like to see that cash gap filled, or futures gap, excuse me, at 42.11. We get north of that, we get to 42.51, then we get to the 200. Now, 200 is going to be an important level if we rally that up. That's 130 points from where we're at. That can happen quickly if it's a severe short squeeze, if something happens. I would probably be a seller up here at the 200, but cautiously to see if we get above it. 42.70 would be your next level up. And then that 42.95, 43.05 level. But I think the 95 would be a good target. I don't know if we get above that. If we do, that 43, 44, 47 area would be up top. Now below, pending we hold that 42.22, the next major low, honestly, is 39.70. From a volume standpoint, this guy here would be your next major target. I'm not saying we get down there. What I'm saying is that if we were to lose this level, which is a major, the next major level I'm looking at is 39.70. Now 88 can hold the 90 there. We have other stuff, other areas in which can hold, right? So the 40, 68, 62 level, right? That's the May and the April low. You have a 39.88 POC here for March, but 39.70 was also a close and open for February and March. So that's why I think that that's going to be my next level down. But I could see this 40, 60, 70 holding if we lose this 41.22 and start to head down. Other than that, we could consolidate. There's a ton of shit going on next week. Here's the weekly, right? So here's our huge volume node. And I actually put this out to, it's 1100. It's like 3 or 4 years now, volume. So as you can see, there's volume spikes throughout here in the 30s. There's a void here from 34 to 36. But your 38.40 or 39.40, excuse me, is your macro 200 on the weekly, which seems to hold, right? So we did dip below COVID, but here's your stop, here's your stop. The problem is if we get below that sustained, then we have some serious downside problems. So 39.70, 39.40 is probably going to be something that they're going to look to hold. You had a high here, not as high as a high here, and so we'll see. But again, we could have come down, come back, retest, and then go up. So there's a case for bulls and bears. I don't know. All I can tell you is there's risk because of this. This is the monthly chart of the ultra bonds, okay? Ooh. They lost that major level 2 years ago, and it's been grinding down since. You had a reprieve back, but this is waterfall selling here. This is an 8-year volume, and they are on the lows of 8-year volume. That means that these levels have not traded in over 8 years. That's kind of nuts. Actually, it's an 8.6-year volume. So again, yes, you can get oversold. Yes, everyone's expecting a bounce. Yes, tilt calls were through the roof, and we could rally this. But as of now, this is a severely downward pressured item right here. So I would watch tilt. Again, if we get a rally, if they can bounce this and find a level and get back up, especially to the 35, which is a monster move, but that's where it needs to get above. Then the selling will continue and the equity sell-off will continue. So that's just kind of what I'm watching is we have risk in the bond market, not the equity market. Everyone's watching the equity market, that's fine. But understand that the bond market is where the risk is right now, not the equity market. That's just a byproduct. From this selling, we're going to start to see selling in the equities as well. Your 60-40 portfolio, the safety one that's been used for decades, is fucking toast. So that's going to have an effect on people. You still have a cash gap right up at the 200-day moving average for SPX. So that's a 42.32, 42.47. From a macro aspect, that's going to be my upside target if we rebound hard. I have downside, 40.84, 40.61. That's from May 3rd of this year. Next one down is 40.32 to 40.27. That's from March. So you're getting cash gaps from earlier this year, which means basically everything that the SPX did this year is being wiped out. And if you really want to get fancy and look at our daily, or how about our weekly, right? So here's 21, 22, 23. Essentially, SPX has gone nowhere for 3 years. So anyway, just keep all this in mind. I don't know what's going to happen. This week's going to be nuts. We have nothing scheduled Monday, so maybe we'll see a consolidation or a reprieve up. Nothing spectacular on Tuesday, ADP, PMI. Wednesday's going to be interesting. You got the Fed. Jay Powell speaks at 2:30. Then jobless claims, productivity on Thursday, and then you have the non-farms on Friday. So this is going to be a week packed full of craziness. I don't know. I'm agnostic right now. We've hit a substantial level on the downside. I would expect a bounce, but just be sure to know that this can continue, and crashes come from the lows, not the highs. That's the misconception. Everyone thinks we get up here and we're going to crash. We're not. We're going to get selling, and then there's going to be a level that breaks that floors it, and it just goes. I don't know where that level is. I'm not saying it happens. I'm just saying that that's where the risks lie, especially when you start to see the bonds liquidated like they are. This is still continue to go down. We've seen bull markets where it squeezes higher and higher and higher and higher for no reason. Well, the same thing can happen on the downside. There's, careful with the oversold stuff. This could be just pure liquidation. So this is where we risk. Anyway, I will be in and out of the room for the next few days. I'm just going to be preoccupied. But I'll still be posting pivots and levels and probably trading off my phone because I'm a degenerate and I can't help it.